This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Now we're going to look at corporate culture, one of the implementation stages that organizations have to undertake. And what is meant by corporate culture? And you have at the top here a definition by Charles Handy, saying that culture is the way we do things around here. And we're all actually very sensitive to what you might call corporate or organizational culture. Whenever you change schools, or first go to college, or first join a new employer, we always tend to go carefully, because we want to find out how people do things around there. How do they dress? How do they address each other? Is it very formal, Mr. this, Mrs. that, or is it first name terms? Do people usually stay an hour after their official stopping time? Because that's the way they do things around there, and so on. Do people socialize after work or not? And we go carefully because, by and large, we want to fit in. Now, why is it important to an organization to pay attention to corporate culture, and what sort of corporate cultures are there? Well, the corporate culture has an enormous effect on how the organization first of all, manages tasks, achieves tasks, and also what the organization looks like from outside, how it presents itself. So if you take an organization which is low cost, one of the lowest cost kind of producers or deliverers of a service, the kind of culture you'll come across there when maybe talking to one of their employees is one which is kind of dominated by certainly not getting anything for free, maybe not even being all that helpful. If, however, you were paying a lot for a service, let's say a luxury hotel, then you'd expect kind of quite a different attitude from staff, quite in a way different standards or behaviors to fit in with what the hotel is trying to offer. The most useful model for corporate culture is this one, which is known as a cultural web. And it has 7 different areas on it. And you mustn't think of these models, where the models are gradually increasing now, you mustn't think of models as enemies, yet another set of labels to be learned. You should think of them as friends, because if you're asked to discuss corporate culture, then this gives you 7 headings that may be able to spark off some comment relating to the scenario which you've been presented with. And the first thing they talk about is symbols and titles. You go into some organizations and everyone's a vice president. That's their title. Some organizations, the supervisors, the managers, certainly the CEO, maybe in a very separate office, even a separate floor, even with a kind of guardian secretary outside to prevent easy access. Some organizations have reserved car parking spaces for certain members, rather hierarchical, if you like. I once was involved in an audit of a large manufacturing companies, and they had 3 different dining rooms. One for the workers, if you like, one for middle managers, and one for top managers. And the food got gradually better as you went up, and the stomachs actually got gradually larger as you went up through the hierarchy. Some organizations that deliberately try to be more egalitarian. They want the CEO really to be sitting amongst the workforce. There will be private rooms to go through to for meetings and conferences, but it's much less symbolic in terms of the sort of rank which you might have in the organization. Secondly, power relations. Easy to think about this. In some organizations, the boss will always tell you what to do. There's no chance really for discussion. In other organizations, it would be very unlikely that you'd be told what to do. It's more likely the boss would ask for your input or might politely say, could you possibly do this? It's much more participative type of organization. The first sort of organization where you're just told to get on with it might be suitable for a cost leader organization where things are fairly static, things don't change very much. But if you're in an organisation where the products and the services are changing rapidly, then you need really participation, collaboration to make sure the changes are correct. And a very dictatorial approach just probably wouldn't work. The boss has not got a monopoly of knowledge. Organizational structure, we'll come on to this in more detail in the next chapter. But broadly speaking, there are two extreme organizational structures. There's what's called tall, narrow, many layers and grades within that. And then there is the wide, flat organizational structure where the people maybe are put into 4 different layers, much less hierarchical, much better communication perhaps between top and bottom of the organization. Control systems. Some companies you go to have got fierce control systems. They will time people as they go in and out. If you want any sort of expenditure, even for small amounts, you have to kind of raise purchase orders, get them signed off and so on. They're fanatical about their weekly production reports and operating statements showing variances, and every variance has to be explained. Again, that might be suitable if you're in a cost leadership environment where it's very important to keep the costs down. It would be probably unsuitable in a differentiation environment if you're trying to offer a really good service to the client for which the service was the client was willing to pay. Then there's kind of penny pinching and having always to refer upwards to get authorization for your actions doesn't sit too well with this personalized differentiation, almost more of a luxury service. Rituals and routines. Rituals and routines, organizations fall into this habit, if you like. In some organizations, it may seem trivial, but there's a ritual that if it's your birthday, you bring in a cake for your colleagues and so on. A kind of friendly, maybe sort of a ritual. When I was training to be an auditor, we were always out during the week. The routine was always to come back on a Friday afternoon, and then on Friday evening we'd all go out together, and we'd talk sometimes about work, sometimes things about what happened that week, sometimes we'd talk rubbish, really, just gossip. But as a kind of bonding mechanism went on there that they found was important because we were normally so dispersed. And if you didn't form part of that ritual, if you didn't go out with people on a Friday night, then there was a kind of potential rejection. You'd certainly feel you were losing out. Myths and stories. Myths and stories are very often deliberately built up, very often to show you almost the perfect way in which the organization behaved in the past. So there may be a myth or a story of how in, let's say, a firm of accountants, we were rung up on a Friday at midday. A client says, I want to take over this company. I need you to do work by Monday. I want to report by Monday afternoon. And so what we did was we all worked over the weekend. We kind of slept in the office. Pizza was brought in and so on to feed us. We worked through the night, but my goodness me, we got that report out on time on a Monday afternoon. And no doubt the success was maybe slightly embellished, and what was happening would be kind of built upon. But this was kind of set up as, this is what we do. This is the perfect way that you behave. This is a very tight deadline. Organizational assumptions, or a paradigm, a kind of fundamental assumption about what the organization is for. This can affect the culture of the organization. So in the UK, in our National Health Service, around let's say the 1950s, 1960s, just after it started, medicine then was relatively basic. And the population was such that there weren't a huge number of elderly people. So the budget for the health service could be relatively low. The government could actually afford more or less to fund every treatment that everybody needed. And the organizational assumption in the health service was that everybody gets all the treatment they need, and there's no real concept of rationing, and certainly no attendance to what the cost of the treatment might be. Now we're in a different situation. There's a much larger proportion of elderly people who are the predominantly ill ones, so that puts a burden on budgets. The sophistication of drugs and procedures is much greater. We have scanners and all sorts of stuff now, and that drives up the cost of actually applying the medicine. And now there's budget pressure. And the organizational assumption now is that maybe we can't afford to give all treatment to all people without any regard to the price. Maybe we have to look at some of the drugs and say, look, for what it does, this is too expensive. It's simply not available under the National Health Service. And there's been quite a shift there. Older doctors who were there in the 1960s and so on really wouldn't want probably to be working for the current health service, which is more budget orientated. Sometimes these paradigm shifts have to be, pushed through. Again, if you were kind of working in a hotel organization, and let's say at the moment you were in hotels which offered relatively cheap basic business type of product and service, and you thought there was too much competition there and you wanted to move up market, then there's a very fundamental change of attitude needed at all levels in the organization if you're going to make that transition successful. So the type of culture which an organization has or evolves can very much affect its performance. Now, these symbols which we have can then be, if you like, result in perhaps 4 different sorts of culture, again identified by Handy. And the first one he identified was a power culture. Basically, in a power culture, there is the boss. There is a kind of Mr. Big. So we definitely know who this boss is. Probably this boss has got the same name as the name of the company. The boss might have started the company. And by and large, in this power company, in this power culture, all power really rests in the boss. There's very little delegation. There are very few, maybe, rules and regulations, very few procedures. The boss will come in and say, give me £1,000 out of their cash or something. And people give the £1,000 out of their cash, maybe without any sort of voucher, which is to be really accounting for that and so on. You tend to find this in smaller companies, because as companies grow, it gets harder and harder for the boss to really keep track of everything, and inevitably a bit of delegation comes in. But nevertheless, it's well known that in audits, many auditing companies have a question in their internal control questionnaires: is there a dominant chief executive? And if there's a dominant chief executive, a kind of power figure, all-powerful figure, then they get a little bit worried during the audit, because this person can override internal controls. And this, of course, is why in corporate governance there was a move to split the people at the top between the chief executive officer and the chairman of the board. As businesses grow, they do tend to evolve into what we call the role culture, where people are basically given titles. And they're given job specifications. So given titles, given grades, given job specifications, and these job specifications are often very narrowly worded so they know precisely what their job is. Everyone knows who they report to. It's very rigid. People are jealous of their title and their grade and so on, and they're very jealous, really, of the little perks that might go with their grade and so on. This can work quite well in organizations which are going to be doing the same, really, for the foreseeable future. It doesn't work well where organizations need to change, or organizations need to be flexible. Because what happens in those situations is that people are reluctant to change. They say, here's my job specification, that's what I'm doing nothing else. or if my colleague was absent and something important this colleague was doing, maybe getting a quotation out to a customer, they're absent because they're ill, I would certainly not kind of try to fill in and cover for that person, because my job specification, I'll do my job, but I won't do yours. So to get flexibility, to get cooperation, especially nowadays, as the technology, the markets, the competition is changing very rapidly, the role culture has gone out of fashion a little bit, and many people now trying to change what's called the task culture. And here, what you want to do is you want to get the job done. There's a focus on the client, a focus on success. We are going to cooperate together. We're not going to mind cooperating with somebody of a higher or lower grade. If somebody's busy on something, we will try and haven't got time for something, we'll try to cover for them, provided we've got the skills and so on. We are willing to form different project teams and so on. But get the task done is the way people are really focusing now, because the tasks will keep changing maybe every week. And finally, there is the person culture. The person culture is relatively rare, not maybe that important. It's really where a person is fulfilling their personal ambition, but maybe they have to be within the environment, within the structure of a company or an organization to do that. One might think perhaps of a surgeon in a hospital, a very talented surgeon, but all this person might be interested in is doing operations, curing people. And they go to hospital, they're part of that infrastructure, if they like, simply because they need the support, but they don't really want to interact with it very much. They just want to come and do their jobs and kind of go home, having done 10 operations in a day and so on. So person culture was recognized by Handy, but as I say, not that important. So beware of the power culture. All the information, all the power of one person. This is a bit like your opportunists, really, in terms of planning. This person can make really fast decisions, but they might be impetuous, they might be wrong, and the controls might be weak. The role culture can introduce very good controls, but very resistant to change, very inflexible, which can be a real impediment to success nowadays. And the task culture, where the concentration is in a way pleasing the customer, get the job done, get the task done, all pull together, all be flexible, as long as we manage to do that.